SOFI midday update. So I think we are getting ready. We've started or getting ready to start the B wave of this move. I think we finished the A wave today when it went all the way up to 755. And we can break it down here on the 15-minute chart. Actually, let's do I think the hourly is probably the best. So on the hourly chart, we have 1, 2, 3, 4, 5. And if that's the case, I'm looking for a zigzag, which means a 50% retracement is kind of what I'm looking for, which is around 620. One thing that shows up pretty big, though, what I've been looking at is the options chain is showing that the $7 puts have more than $7 calls, which means I think that we could dip here today or tomorrow, and then by the end of the week make it back above 7, or maybe it'll be a shorter dip. But the zigzag usually needs about a 50% retracement, which is about 620. And then where would I be aiming for after that? Well, the 50% retracement from here is right at 771. That's the lowest that I would see us hitting. The most likely is probably going to be right here on 840, and then possibly, if you get lucky, all the way up here at 937. So those are kind of two targets. If we only hit right here, I'd be very surprised because I don't expect the B wave to go down that far. If we hit here, I would expect the B wave to go way farther down and then barely bounce and break above this. So if we hit the 50% retracement, I'm looking for probably at least 840. And then if you go back here to the last ABC movement we had, let's just see where it went to. And it went to the 1.23, I think. Let's see here. So yeah, it went back to about 1.23. So where is that on this chart as well? That's another thing, because this move looks kind of identical to that move, which was on March 14th to the 30th. So the 1.23 fib is somewhere around $8, $8.15. So that's another target as well. So anywhere from 770 all the way to 940, I would say $8 to $8.50 is probably the most likely spot. But then again, it just kind of matters in the overall market. That's another thing that's kind of weird, though, is we've been pretty strong today with the market falling, and so that makes me kind of weary to make any hard predictions on where this is going. If we would have fell today, then that would make a lot more sense. But since we're holding up and the market's falling, what happens when the market pops back? Do we barely dip, or is this wave not finished? Like, those are things that go through your mind as well. I've sold some covered calls pretty aggressively the last couple of days, even at like 750. I have a few at 850. I have some at 9 for June, just kind of as a safety play. But I decided to go pretty aggressive because we've gone up. What percentage is that? We've gone up pretty much like 50% since the bottom. And so I think it's pretty likely that we will hit this 620 area. It's just taking a while to materialize. And it's kind of tricky with the market falling and we're holding up right now. So yeah, if you look at this chart, though, this is a very good way to look at it on the 4-hour. You can just look right here. This is very, very similar. And this took from the very top of this was March 18th. It took us 10 days to get to the bottom of the B wave. So the top is today. It could be May 28th before we get down to this level. So it could be another week or two. So that's something to keep in mind too. It could be quick, but I'm using this as a pretty good like model of where we're going to go to. So if we do dip here, then we probably get another quick move here. This went from 10 days, and then within 2 days finished off. Went up another 15–20%. So it could be a slow move down, but if you have covered calls here, then you're probably going to do very well. If you have puts, I wouldn't really recommend that because you're going to be squeaking out some gains. You're not going to be really getting that much out of it, in my opinion. Covered calls are the play here. And then when we bounce here, you could buy calls. I probably wouldn't recommend that either in this market, but you could buy shares and then you could sell them up here. Or the best option, and what I'll probably be doing, is my covered calls here. I'll take profit down here and then I'll wait for the next bounce for the C wave to finish off this B wave. And I'm probably going to sell some in the money calls for like a month out, something like that. So I get more premium, because I think that when this does start dipping, if it follows this pattern right here, it could be a long drawn out month and you want to get as much premium as possible to cover your shares. And so that's kind of my plan. I'll probably do like, let's say this happens by May 31st, I might do like July 850 calls or something, depending on where we're at, and see if I can get maybe even $1 for them. That'd be great if I could do some in the money and get $1 for each one of them. That would be amazing. But that's just kind of my plan. So look for the B wave to start here soon. Even though the market's kind of funky right now, I think that we will dip. And then when we catch up to the market as it's coming back for its C wave, it's on A, B, we should get something up here. I expect SOFI to hit $8 minimum. So that's the update. Let me know what you think in the comments, and please like and subscribe. I'm trying to make as many videos to help you out using Elliott Wave, so you make smarter decisions on your options trades and you can make more money. So let me know what you think, and I'll see you in the next video.